This is Chapter 6 in-class problem. We've got two problems, a petty cash problem and a bank rec problem. We'll do the petty cash problem first. We set up a petty cash fund for payments of small amounts. The following transactions involving petty cash fund occurred in May, which is the last month of our fiscal year. On May 1st, we prepare a company check for $300 to establish the petty cash fund. So we only hit the petty cash account. We only use petty cash in a journal entry when we increase and decrease the petty cash account. And so here establishing is increasing the petty cash account, the petty cash fund. So you really need to just memorize or write down the journal entry to increase the petty cash fund and to decrease the petty cash fund. So here's increase. We're establishing increase, same thing. We're increasing from 0 to 300. We are using cash, so we're pulling money out of the company's cash account. And how much? $300. So we're going to credit cash. Cash is an asset account. We're decreasing it. We do that with a credit. And we are increasing the petty cash account. The petty cash account is also an asset. We increase assets with a debit. So I kind of talked to you through that, but you can also just remember that to increase the petty cash fund, it's a debit to petty cash in the amount. Here it's $300 in the amount of the increase, and a credit to cash in that same amount. Next, on May 15th, prepared a company check to replenish the fund for the following spending. So it looks like we paid $88 for janitorial expenses, $53.68 for miscellaneous expenses, $53.50 for postage expenses, $47.15 for advertising expenses, and then E is not really an expense, or not an expense like the rest of them are. Instead, E is telling us that we've got $62.15 left in our cash box. So what's supposed to happen is at any time we go and we get this petty cash box, open it up and count the receipts and the cash, it should come back to the amount that's in there. In this case, $300. So I'm just going to check that. I've got a receipt for $88. Oops. Try that again. I've got a receipt for $88 and a receipt for $53.68 and a receipt for $53.50 and a receipt for $47.15, and I also have $62.15 in there. So it's not $300. It should be $300 exactly. All of the receipts and the remaining cash at any time should equal $300. We have $304.48. So we made a mistake somewhere, and there's an extra $4.48 in there. Okay, so I just wanted to kind of do that really quick so we could see where we stand. Let's get back to the journal entry. So for the journal entry, this type of journal entry, this is the other type of journal entry we're going to have with the petty cash fund. This is where we are recording all of those expenses and replenishing the cash. So there's really kind of two things going on here at once. First, recording all those expenses. So I'm just going to write down, they've told us what all these expenses are. I'm just going to write them down. We've got janitorial expense for $88. We've got miscellaneous expense for $53.68. We've got postage expense for $53.50. We've got advertising expense for $47.15. That's one thing we're doing. The second thing we're doing with this journal entry is we're replenishing the cash. I know that there's I know that our cash doesn't add up, right? Our receipts and our cash doesn't add up exactly to 300. So I know there's going to be a cash over short line. I'm going to leave a little bit of space. I'm moving into this next journal entry area, so let me scratch that out so there's no confusion. Cash. We need to replenish the cash. There should be $300 in there. We've got $62.15 in there. So I need to put in $237.85. It's a credit to the cash account because I'm pulling money out of the company's bank account, our cash account, to put it into the petty cash box. That's why this is a credit to cash, $237.85. Now, I also know, because I did that quick calculation, and the cash, there's an over short, there's an over in the petty cash box. But if I hadn't done that, this would be my next step. First, I record all of those expenses. Next, I figure out how much cash I need to pull out of the company bank account and put into this petty cash box. How much cash I need to get it back to where it's supposed to be. It's supposed to be at 300. It's at 62.15. So I need to put in 237.85 to bring it back to 300. The third thing I need to do is make sure my journal entry is in balance. I know it's not, but the third thing I need to do is make sure my journal entry is in balance. So I'm going to add up all of my debits, 88 and 53.68 and 53.50 and 47.15. And that is not 237.85. So I've got 242.33 on the debit side and only 237.85 on the credit side, so I need another credit. This is going to be cash over short. And the amount is going to be the difference between that 242.33 and 237.85. And it's at 448 that I calculated earlier. There we go. Journal entry is in balance and properly written. So next, on May 16th, prepare a company check for $200 to increase the fund to $500. So now, for whatever reason, we've decided $300 isn't enough in our petty cash box. We want to bring it up to $500. So when we're hitting the journal entry, when we're hitting the petty cash account with a journal entry, there's only two reasons we're doing that: to increase the petty cash fund or to decrease the petty cash fund. We already saw that May 1st journal entry is what an increase looks like. So we're going to see that again right now because this is another increase. I'm going to write it up here. On May 16th, we're going to debit petty cash for $200 because I want to increase that asset account called petty cash. I'm increasing the amount of physical cash that's in the petty cash metal box from 300 to 500. So I'm increasing it another 200. And I'm going to debit cash for that $200 because we're pulling $200 out of the company cash account, out of the company bank account, in order to put it into this petty cash box. So that's what a petty cash increase journal entry looks like: a debit to petty cash and a credit to cash. That's May 16th. Now, what do I have? May 31st. The petty cashier, so the person in charge of the petty cash box, reports that $288.20 is in the box. A company check is drawn to replenish the funds for the following expenditures. So procedurally, practically, what is going on is it's time to replenish. So we go to the petty cash box and we pull out all of the receipts and we figure out how much money is in there right now and how much more money am I going to need to add to it to get back to, in this case, $500, get back to where it should be. And if there were no mistakes, the amount of money I need to put in should exactly equal the amounts of all those receipts that I'm taking out. But we've already seen mistakes happen on May 15th. We had too much money in there. Let's see what happens on May 31st. So let's record. The first thing we're going to do is record the expenses. I've got more postage expense. For $147.36. And I've got mileage expense for $23.50. And delivery expense of $34.75. That's the first thing we want to do, is record all of the receipts, record all of the expenses from those receipts. We only had 3 of them this time. The second thing I need to do is replenish the cash. So that's going to be a debit to cash. I don't know if I'm over or short. I didn't do that step that I did last time on May 15th. I'm leaving a little space in case we need cash over short. So the second thing is replenish the cash. There should be $500 in there. We started with $300, but we upped it to by another $200 to get it up to $500. So there should be $500 cash in there. And we counted it up, or the petty cashier counted it up for us, and there's $288.20. So we need to pull $211.80 out of our company bank account, out of the cash account, and put it into the petty cash box. So $211.80. Now we check to see if the journal entry is in balance. So I'm going to add up my debits. 147 and 36, 23.50, 34.75, and my debits and my credits do not match. I am going to need another debit for the difference between my debit side, 205.61, and my credit side, 211.80. So let's find out what that difference is. Minus 211.80, $6.19. Now I'm in balance, and we're going to call that cash over short. Now I'm in balance. And also on May 31st, we decide that $500 is too much. We think $400 is more appropriate. So now we're going to reduce the fund by $100. Like I said, I've said a couple times already, there's really only 2 types of journal entries that we're going to see that have petty cash in it as one of the accounts. When we're increasing petty cash, and we've got 2 examples of that up here, a debit to petty cash and a credit to cash, and when we're decreasing petty cash. Here we're decreasing petty cash. It's just the opposite. So I am going to credit petty cash for that $100, and I'm going to debit cash because I'm pulling it out of the physical cash box and I'm going to deposit it into our company bank account. So I'm going to increase our cash account by $100. That is the first problem. Here's the second problem. This is a bank rec problem. The following information is available to reconcile our book balance of cash with our bank statement cash balance as of the end of July. So the company cash account has a $27,497 debit balance. So cash account is an asset account, has a normal debit balance. Since this has a $27,497 debit balance, that means we have $27,497 in our cash account on our books. So we're going to put that right here, $27,497. Remember, we've got two sides to this bank rec. I can draw a straighter line than that. Maybe I can't. We've got two sides on this bank rec. We've got one side that starts off with what we say we have in cash and then puts in adjustments for things that we didn't know about and we haven't yet put into our accounting system, which comes down to an adjusted balance. And then the other side shows what the bank says we have in cash. And then we make adjustments to that for things that the bank doesn't know about. And then that'll also result in an adjusted cash balance. And then we compare these two numbers together. And they need to be equal to each other. And when those two adjusted balances are equal to each other, then our bank reconciliation is done. Okay, so we start off with what we say our bank balance is. And A also tells us what the bank says our bank balance is. The bank reconciliation doesn't directly reconcile those two numbers to each other. Instead, we make adjustments to get a third number, and then the bank reconciliation reconciles that third number to each other to make sure the two different calculations of that third number equal each other. It can happen that our bank statement balance and our book balance are the same from the start, but it's not very common. Okay, so I've got A out of the way. B, check number 3031, 3065, and 3069 are outstanding checks. Outstanding checks are checks that we've written and we've already deducted from our book balance. But they're still floating out there somewhere in the world. They haven't cleared our bank yet, so the bank doesn't know about them. So we need to put them on the left side and on the bottom of the left side, because eventually these are things that are going to be subtracted out from our bank balance. So outstanding checks always go over here. And I'm going to write the check number, and I'm going to write the check amounts. And I'm going to total them. $41.45. I'm going to put that right here. $41.45. I'm going to put bracket around it, because what I'm going to do is I'm going to take that total at the top, the 27,233. I'm going to add anything that ends up in that add section. I'm going to subtract everything that's in the deduct section, and that's going to get me to my adjusted balance. I left a little bit of room down there in case there is something else I need to deduct, but as of right now, 41.45 is my deduct amount. Okay, so I've got that. Next, check number 3056 for July rent expense was correctly written and drawn for $12.70, but was erroneously entered into the accounting records as $12.50. So we get a mistake right up front. The mistakes are tough. All the rest of these things, they go in a particular area. Outstanding checks always go on the bank side in the deduct quadrant. And as we're going to see when we move through the rest of this problem, all of the other things we're going to encounter have a specific quadrant that they always go into. So once you understand what it is that we're dealing with, like in B, outstanding checks, then you know what quadrant it goes into. Errors don't work that way, so we kind of have to think our way through to figure out which quadrant it goes in. So we're going to start off with which side does it go on. The rent expense, the check for rent expense was correctly written. So that means our rent was $12.70. And correctly drawn. So the bank properly pulled $12.70 out of our account. So the bank side is good. The correct amount is $12.70. That's how much we wrote the check for, and that's how much the bank took out of our checking account. So the bank side is good. But was erroneously, in error, mistakenly, entered in the accounting records as $12.50. So the mistake is in our books. The adjustment is on the right-hand side, the book side of it. Now we just need to figure out, are we adding or subtracting? Our book balance is currently $27,497. Should it be higher or lower? Let's see. The correct amount was $12.70, but it was entered into our system as $12.50. So we didn't pull enough out of the bank balance when we put it into our accounting system. It should have been recorded as $12.70. It's only recorded as $12.20. We need to record another $20 of expense. So we need to deduct another $20. So this is going to be, we're going to just call it error. And then maybe in parentheses we can put check. I'm going to just put CK. Check number, what is it? 3056. $20. And same thing, I'm going to put $20 over here. Because if there's nothing else for deduct, then it's going to be book balance plus any additions minus the $20 gets us to the adjusted balance. Okay. Those errors are the toughest ones because you kind of have to think your way through it. Okay, D. The July bank statement shows the bank collected $79.55 cash on a note for us. We have not recorded this event before receiving this statement. So what this means is we've got a note receivable out there. Somebody owes us money and they're paying us. But instead of asking them to send the payment directly to us and then we put it in with our deposits into the bank, we ask them to send the money directly to the bank. It gets to the bank quicker that way, and then we just let the bank tell us when the deposit has been made. So that's what this is saying. We looked at the bank statement and we see, oh yeah, so-and-so that owed us $79.55, they made the payment to the bank. So we need to put it into our books. And that goes up here on the add side of our side of the bank rec. So this thing can be different. What it's called can be different things. Sometimes it's called receivable collection, or sometimes it's just called collection. Here, I'm just kind of following along with what the solution has, and the solution is calling it proceeds from note. Any of those should be acceptable. And it's $79.55. It's an add amount, so I'm going to leave it without the brackets. Next, we've got bank statement shows $805 NSF check. The check had been received from a customer. A branch has not yet recorded this. So the NSF check means last month a customer wrote us a check for $805. We took the check, put it into our deposit with other checks. The bank showed it as a deposit into our bank account with all the other checks that we deposited. And then the bank goes and collects it from the other banks. So we use Bank of America, and Citibank is what our customer uses. So the customer writes an $805 check from their Citibank account, gives me the check. I give it to my Bank of America bank. They put the money into my account immediately, and then they go to Citibank to try and collect the $805 and all the other checks that I deposited. Citibank told my bank there's no $805 in that account. So Citibank sent the check back. Instead of sending cash back to Bank of America, back to my bank, they sent the check back to my bank, and then now my bank gives that check back to me and says, this is an NSF check, non-sufficient funds. This is a return check, a bounce check. All those are interchangeable terms. And they pull the money out of my bank account. So I didn't know about this until I just read the bank statement. I need to reduce my cash account by this NSF amount. And does it even say the check? It doesn't say the check number. Sometimes it'll have a check number on there. And this is, I'm going to erase this and just do it like that. And this is 805. 805. I'm going to put brackets on it just like that because it's in the deduct section. Okay, next. July statement shows, and the bank statement. The July bank statement shows a $25 bank service charge. It hasn't been recorded in miscellaneous expenses because no previous notification had been received. This is just a fee that we learned about right now as we're reading the bank statement. So we need to deduct it out of our book balance. So I'm going to put bank, I guess it's only 4 letters. I'll write it out. Bank fee. $25. We can get rid of this. $25. Got that. And our daily cash receipts of $11,514 placed in the bank's night depository on that date, but they're not on the July 31st statement. So we collected cash from our customers, $11,514, wrote up a deposit slip, put it into one of those locking bank bags, and then dropped it after hours into the night depository bank and recorded it in our books as an addition to cash. But when the bank printed off our bank statement, they hadn't yet gone and collected whatever drops were made into that night depository box. So the bank doesn't know about that. We're going to put that over here on the bank side of the bank rec. This is called deposit in transit. And the amount is $11,514. That's an addition. Okay. Let's see how it turns out. Let's start on the bank side. 27,233 plus 11,514. minus 4145. 34,602. 34,602. And the other side is 27,497 and 79.55 minus 20 minus 805 and minus 25 gets us 34,602. 34,602. So our adjusted book balances match, our bank rec is done, and we're good. There's one more step. That was required one. Required two is make the journal entries. So everything on our side, everything on the book side of the bank reconciliation, everything on the right-hand side of the bank rec has not yet been recorded in our books. And so we need to record that. The everything from the add quadrant is going to be a debit to cash. Everything in the deduct quadrant is going to be a credit to cash. So for the first one, proceeds from note receivable, we're going to debit cash for $79.55, and we're going to credit note receivable for the same amount. That is what this whoever we lent to paid us, and so it reduces what they owe us. Note receivable is an asset account that we are reducing. Next, there's that error, and that error was up there in C. It's for rent expense. So we need to record more rent expense. That's the journal entry for that. Next, the NSF. So some customer, which customer is it? Evan Shaw owes us this $805. So we're going to put accounts receivable Shaw. We're going to go find him, and we're going to tell him, hey, we got this check back. It was returned. We need $805 from you. And then finally, the bank fee. Where did they tell us to put it? We can use bank fee, bank charge, bank fee expense, but they're telling us to use miscellaneous expense. So miscellaneous expense for $25. And that's it.